Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings conference call of KELTONTEC Solutions Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing *0 on your touchtone phone. Please note that this conference is being recorded. I would like to thank you all for participating in the company's earnings call for the second quarter of the financial year 2021. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's conference call may be forward-looking in nature, and such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management beliefs as well as assumptions made from the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and a financial quarter under review. Now I would like to introduce you to the management participating with us in today's earnings call. We have with us Mr. Niranjan Chintan, Chairman and Whole-Time Director, Mr. Karanjit Singh, Chief Executive Officer, India, and Mr. Srinivas Kotluri, Chief Executive Officer, US. I now hand the conference over to the management. Thank you, and over to you.
Good afternoon, everybody. This is Niranjan. Thank you for joining our Q2 earnings call. I want to first start off with the numbers and then give you a little bit of the performance of the company after this. Last quarter, which is Q2, we have achieved 191 crores as a revenue with an EBITDA of about 25.9 or 26 crores and a PAT of about 15.8 crores. This, if you look at from a Q on Q, there's a growth in the top line of about 5.4% and the bottom line of about close to 10%, which is something that we have been, I guess, I've been hinting that this quarter is going to be much better than the last quarter, and we have achieved that. Now, comparing to the 6 months numbers, we are at around 373 crores for this half yearly numbers with a profit of about 30.3 crores. This compare with the last year, slightly dipped, but we have again have projected that this is how it's going to be, and we have recovered from the first quarter, the big dip that we have seen because of COVID. And we are getting stabilized. Hopefully, the new increase in US corona numbers will not affect the operations. But we have seen in Europe where the shutdown has happened, we have started seeing some of the impact already in Europe, but we have not seen that in US yet. I'll let Srini talk about it as we go on, about how the impact of the elections as well as the new spike in COVID is going to impact our numbers as well as the general sentiment that everybody's talking about there. Now, coming to the performance of the company last quarter, we have signed up about 9 new clients, and I think we have already announced a couple of major wins that we have got some press releases out that we have achieved last quarter, and those have started producing revenue last quarter as well as this quarter. But this quarter, we expect some increase in revenue from the new clients that we signed up. We are also have partnered with a few of the partners like Google Cloud, partnership with Work2, Dell Boomi. We have signed up quite a few new partnerships. This is going to yield some business opportunities in the future. We have also signed up with Riyadh Digital. Again, this is something that we have seen press release, as well as Momentum Quads. We have been selected to implement SAP S/4HANA. And this is something that we have achieved over the last 6 months, and we expect that with continued growth that we anticipate in the next few quarters. Again, I have to caution. I think we have already been saying that quite a while. The COVID impact is still there. We don't know what the impact in the US is going to be, and like I said, we're already affected in Europe. We have to see how that goes on with the new lockdowns that have been announced. With that, I wanted Srini in the US to just give a quick update of what he's seeing there with the election, as well as the new COVID spike, what kind of impact that is going to have on our business. Srini, over to you, Srini.
Thank you, Niranjan. Good evening, everyone. Thank you for joining the call. I'd like to briefly talk about first the election scenario. Obviously, with the previous government, there have been some changes to immigration policy, H-1 policy, etc. But with the Democrats coming into power at this point, many of the Trump-era immigration policies, there will be presidential orders, executive orders that will rescind some of those. What we see is that the restrictions to asylum seekers, travel and refugee bans, increase in immigration-related fees, all of these things, it is expected that as soon as Jan 20th, the Biden administration comes in.
Srini, we lost you.
Mr. Srinivas Paduri, we can't hear you, sir.
Looks like we may have lost him. Margaret, can you reconnect him while we do the India operations?
Yes, I will do that, sir.
Okay. So, Karanjit, can you give a brief commentary on what you're seeing in India and the Asia-Pacific regions? Karanjit? Karanjit, if you're speaking, you're muted, Karanjit.
Mr. Karanjit Singh, can you please unmute
Thank
yourself?
you. Yeah, I hope you can hear me now. Yeah, thank you, and good evening, everyone. So on the India side, actually, or in the Asia Pacific side, we have actually seen a lot of acceleration of some of the digital deals that we were working on, and the things as the country has kind of pretty much been emerging out of the lockdown. Things are getting back to normal, and customers have been engaging. Most of the work that we were doing all through the lockdown period has further accelerated. In some places, in fact, which were actually badly impacted, also engagements have restarted, or they've also started asking for people to actually come on site. We have signed quite some significant deals on which have actually accelerated, which really are accelerated digital transformation. Like one of the ones that I'd like to mention, apart from the Riyadh Digital, which obviously there was a press release, we have signed up a large F&B customer in the Middle East. We have signed up an NBFC, which is implementing a digital infrastructure for the lending experience. They're a very niche kind of market that they're addressing. We have actually signed up an AI-based, security and video analytics platform. So these are the kind of deals that we have, which have got signed, and we feel that, and there are some industries like education, like the sales side of a lot of companies, which are actually seeing accelerated adoption of digital, because today they have no choice but to actually accelerate the virtual engagement with their customers. So yeah, this is broadly kind of what we're seeing in the market out there.
Thank you.
That's all I had, Niranjan.
Okay. So, Srini, are you back, Srini?
Yes, I am back.
Sorry, you got cut. So can you just finish up what you're trying to say?
Yeah, sure. Sorry about that, gentlemen. So as I was saying, all the Trump era changes that have been made to the immigration rules will be reverted in the first 1 or 2 months of the new presidency taking over on Jan 20th. That is the expectation, that there will be a lot of executive orders where Trump had eliminated the H-1B cap lottery and replaced it with a salary-based system. That is going to go away. We will get back to the H-1B cap lottery system. The number of H-1Bs available will continue. There will be changes to the definition of specialty occupation, and the ability to be able to place H-1B consultants at client sites will improve. So it is expected that from an election perspective, the immigration rules and immigration laws will go back to the way they were prior to the current administration. And also, from a perspective of business continuity, the stock market is doing well in the U.S. It is going to continue. There is no expectation that Biden is going to change anything drastically at this point. So we are all eagerly waiting to continue business as usual. Things will improve as they have improved over the last quarter or two. And we are looking forward to it, and consumer confidence growing in the U.S. From a COVID perspective, phase 2 has started in various parts of the world. Biden has promised that he is going to continue the economic upturn in the U.S. Yes, we will be more careful here in the U.S. with respect to continuing with the COVID hygiene, wearing masks, etc. But it won't impact the business just because the government has changed and COVID, there's a second wave of COVID that is expected. Well, it is actually going on at this point. So all in all, it looks like things will not change much. We are more experienced with managing and handling COVID at this time. So we expect that the impact would be less. There is no talk of any shutdowns in the U.S. at this point, and we don't expect that it will happen either. I think the vaccine coming out and the 90% efficiency of the vaccine is going to be helpful as well from a confidence level perspective and continuity of business.
Good. Thank you, Srini. With that, Margaret, can you open up for questions?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jagdish Kumar, an individual investor. Please go ahead.
Good afternoon, Jagdish.
Yeah, good afternoon, Ranjan. Yeah, thanks for good set of numbers.
Thank you.
Okay. Yeah, my only question is regarding this operating profit margin and EBITDA margin, right? So, what is our action plan to improve that? Or I know it is a COVID time and this is not the correct time to ask this question, but still, I'm not asking the immediate time, but in future I'm asking. Maybe next year I'm asking.
Okay. So, I think Jagdish, like we were, I guess, giving commentary earlier too. Our strategy is to increase the EBITDA to probably now get at least in the high teens is what we're targeting. We were around 16, over 16. Our goal was to get to the 20, but unfortunately, like you were alluding to, COVID is has impacted whatever we planned. And we were again targeting bottom line of about at least over 10% is what we were targeting. But like I said, this is right now for us. We don't know when we're going to go back into that the curve, but we want to get the EBITDA numbers about 20 and the PAT numbers over 10 is what our goal. We have touched that a few times, but unfortunately, COVID has prevented us from being consistent with that. Right now, we are on more of a cash preserving kind of a mode where we're trying to get as much cash as possible because of the uncertainty with COVID. Like Srini was alluding to, hopefully this uncertainty goes away because of the vaccine that came in. But the expectation of the vaccine reaching, I guess, huge number of population is probably they're talking about Q2 of next year. We don't know what that means when it comes to the numbers as well as the costs associated with trying to work and prevent our employees from getting impacted. So this is something that is something that we are mindful of, and hopefully next year is what I would say we'll start back on the trajectory of getting back into closer to the 20% and the bottom line about 10% is what we have targeted for, and hopefully we'll start achieving. But this year, pretty much like everybody else, right? We are in the boat of where we're saying, okay, hey, we want to survive this year, and our ambition today is now get back to the same numbers as last year. I think we should hopefully achieve it unless the new lockdowns and the new spike in COVID impacts the numbers. But we anticipate that we should be at least at the same numbers as last year, which in itself is going to be a good achievement, is what we believe from our side.
Yeah, thank you. If I can ask you another question.
Please do.
We have some alliance with, some deal with G5 app, right? So can you please show some color on that? What is it for us?
Jagdish, can you please just repeat the question? I just did not.
Yeah, we have partnership with the G5 OTT app, right? So can you please show some color on that G5 OTT app?
B5 OPT app?
Yeah, G5, yeah.
Srini, Karanjit, do we know what Jagdish is asking about?
Yeah. So, basically this is something where we're working with them to essentially build their own OTT platform using complete serverless architecture and analytics-based architecture on a new age CMS to kind of help them rapidly scale their OTT offerings. So the revenue will be start flowing from which quarter, or is it just a POC based currently going on? No, this is actually a project and it's already kicked off. So the revenue is already started, and of course the team is ramping up.
Yeah. I think Jagdish, we are building it for a customer. It's not something that that we have as a product. Karanjit, correct me if I'm wrong on that. Okay, so it is not. No. It's a revenue stream we get more from a services than as a product.
Yeah, I understand, but let me. Please correct me if I'm wrong. So, am I correct by saying that the G5 app? So they have initial setup, right? So we are changing some server less architecture, saying, right? So am I correct that we are doing for G5 app, right?
Yes. So this is basically being we are changing the whole backend the CMS platform and basically making it ready for scalability, right? And more contemporary architecture.
Okay, because this is one of the major app, right? So once we giving this, right? So this also can give us some other insight to other projects, right? So that's why I just thought of giving some clear on this. Yeah, thanks for the input.
Yes, we hope so.
Yes, Jagdish, sorry Jagdish, I could not understand it. You're talking about Z5. Okay, now I got it.
Z5.
Just that it's a little bit, your voice was not clear, so sorry about that. So that's why I didn't understand your question there. Okay, I think Karanjit answered your question. Thank you, Jagdish.
Yeah, thank you. Hope we also get some other big projects like this, in future.
Absolutely, we are working on that. That is our goal. I guess it's like Karanjit was saying, this lockdown has given us some opportunities. COVID has given us some opportunities. And people are looking at us, NU if you want to call it, because they understand that we are born digital, and we are something that we have been doing a lot of similar activity for other customers. So it's good that in one way that COVID has opened up a number of customers, I guess eyes on KELTON, and we hope that we can get some good revenues out of these.
Yeah, sure. Thanks. All the best for it.
Thank you.
Thank you. The next question is from the line of Ujjwal Agarwal from New Horizons FinServ. Please go ahead.
Good afternoon, Ujjwal.
Namaste. Namaste. Hello.
Namaste.
Now my question is that a good chunk of our revenues comes from US right now. Am I right in that?
That is correct. About a little over 80% is coming from US, correct?
Yes. So are we looking to diversify that stream in the future, in the near term? That is my question.
Yes, the idea is for us to increase our European base of operation. Right now, we are about 5-6% of our revenue comes from Europe. We're trying to increase that, but unfortunately, we had a lot of, inquiries coming in before Europe shut down, and we don't know what that impact is going to be in the short term, long term. We just, playing it by the year and seeing, how we can push to get more revenue out of Europe. But our goal has always been to diversify and at least get 10% of our revenue from Europe. We had ambitions of getting it to 2030, but right now we have scaled back and said, let's just get 10% of our revenue from Europe. Asia Pacific, on the other hand, has been building up, and we are seeing a lot of traction from the markets of Indonesia, Singapore. We are seeing a lot of, and now Middle East also has opened up dramatically, and that should increase. But as I have said in earlier quarters, since the rupee dollar parity, the currency parity between other countries and US, that is always going to be skewed towards US. But yes, we want to diversify. We want to get more revenue from other geographic regions. But unfortunately, the plans that we put in motion has took a hit because of COVID. Hopefully, like I said, if we survive this year with the same numbers as last year, next year would be better. And the vaccine has given a lot of confidence and hope in to get these numbers up, and a lot of companies are opening up.
Yeah, I've been quite optimistic on KELTON, and I'm sure that you guys will deliver. And that is all from my side. Thank you.
Thank you, John.
Thank you. The next question is from the line of Suresh Peddy, an individual investor. Please go ahead.
Yeah, good evening, sir.
Good evening, Suresh.
Thank you for providing all the details, and they're very detailed, and I think a lot of details are available in the annual, the result statements what you have published as well.
Thank you.
Just have a couple of questions. The first one being, how is the cash position comparatively, and are there any plans of retiring the debt completely? That's the first question.
Yeah. Suresh, today, we are trying to conserve cash. At this time, there are obligations, monthly, quarterly, that we have to pay off some of the loans that we have as term loans. But if this year, is more of a cash preserving and cash shoring up than to retire debt. The retiring debt we'll relook at next year. But for now, our goal is to conserve cash. As much cash as possible, we want to shore up. That is how we are looking at for the next 6 months. Next year, absolutely, we do want to retire. Earlier, we were hoping that by 2021 to 2022, we would have retired all the debt, but we may have to push that by a year. That's because of the COVID impact, as well as, you said, right now we're in a mode of, if somebody is going to give us cash, we'll take it. That is the mode that we are in today because of the uncertainty than anything else. Right. I hope I answered your question there, Suresh.
Yes. Thank you for that. And the other question I have is, in general, the IT industry, if you look at the other companies, the top line and bottom line growth rates are much higher compared to what KELTON is showing. So just trying to understand why KELTON is showing, maybe I think you have just mentioned that it's about 5% growth rate quarter on quarter, and year on year it's almost flat. So whereas the other players in the industry, they are showing higher growth on the year-on-year numbers as well, and quarter-on-quarter is much higher. So is there any reason for that? And is there any strategy to, do comparatively better is what I'm trying to understand, sir.
Sure. See, so we have grown both organically and inorganically, Suresh, and we have not taken any money from the market to date. It has been self-funded. Unfortunately, there's only so much growth that we can do using the money that we have either pumped in, being the promoters have pumped in, and or the internal accruals. Unlike other companies where they were able to raise money through the public market, we were unable to raise. That is one of the reasons why the growth has, if you want to call it, not been exponential. We were earlier doing a little over 20% year-on-year growth that we've been showing earlier. But now what we are looking at is more of a stabilizing operation and rebuilding the balance sheet side of it so that we are ready for the next stage of growth, which is something that I've been giving commentary for the last 1 year, saying, hey, now we are looking at more of getting our balance sheet in a better shape before we start doing the growth spurt. And unfortunately, because of COVID, right, we got impacted. The Q1 impact, I don't know about others. I don't want to comment about others, but there was a significant, decrease in revenue when it came to the U.S. operations. India operations, I think, we were not hit as bad. I'm talking about purely revenue-wise, but there was a huge impact of U.S. operation on that, on our numbers. And also, lockdowns have caused certain customers, including government customers, to delay some of the revenue booking that we could from these customers, and that has also put a dent on the growth. But the short-term ambition for me is to survive this year with flat or better than last year. We'll come back to the growth curve based on how much cash we have, because anytime we have to grow, we have to get pump cash in for that growth or fuel the growth, and that's where we got stuck for the last 1.5 years. But hopefully we'll come out a little bit stronger with the balance sheet after this COVID comes out, and then we'll start looking at how to increase the growth.
Sure. Thank you, sir. And
thank you,
when they survive cash, how's the situation now, sir? Is it?
We did publish our cash flow statement. Let me pull that up while we're speaking. If you have any other questions, I'll pull up the cash flow. We did publish it. I think we are around 23 crores is what we have in cash.
Okay.
So that is what we have as of last quarter. But again, that's compared same as in the previous year. But like I said, at this time, we have to conserve cash. This year the cash is not going to be great because collections have been delayed, and also we've been paying down our debt. I think this is something you asked the question, which is the quarterly numbers. We have not missed any of our payments to date, and so that's what we want to continue on. So it's not great, but I agree. But this is something that unfortunately this is where we are today.
Sure, I appreciate that, sir. The last question, sir. You did mention that we are in consolidation phase right now to strengthen the balance sheet and then refocus on the growth path which was there in the last 10 years. I think last 2 to 3 years it was more of consolidation phase. So is it reasonable to assume that in probably leaving this year and maybe some part of the next year, they will be able to come back to the growth path maybe 1 to 2 years after 1 to 2 years? Is that a reasonable assumption?
That is our goal, Suresh. Yes, next year onwards we should see a growth again. Because like I was giving commentary and like you're saying that we are more on a consolidation phase. We grew very aggressively earlier on, and we had to stabilize our operations, beef up our operations. The management team that we have in place, we had to shore up those. So that's the reason why we were more focused on org building and that now we have the team that is with a few additions that we want to make. That we have the team that could take us to the next level of growth.
Okay. Thank you so much, sir.
Thank you, Suresh.
Thank you. The next question is from the line of Vikas Kumar, an individual investor. Please go ahead.
Hello.
Hi, Vikas.
Hi, everyone, and congratulations for big wins like Z5.
Thank you.
Yeah. So my question is, from a pricing perspective in the company, is the company seeing any pressure in US and in India with respect to giving any discounts to the clients? And how are the top clients doing? Can you throw some light on that for both India and US, if I talk about?
I'll let both Srini and Karanjit address this question there, Vikas, because they deal with this. But I think the commentary that we gave in the last quarter was, yes, we did give some discounts. I think most of the discounts have been taken back now, but I'll let Karanjit and Srini talk about it. Srini, why don't you take the US one, and then we'll ask Karanjit to pick up the US one, India one. Srini?
Sure. So if I heard the question right, it is about the pressure on pricing due to COVID?
Correct. Yes, that's the question.
Yeah. So initially when we came across this in March, we had to provide some discounts to our customers. Not all of them, but some of them who requested it to cope with COVID. We did that for a 3-month period. And since then, we have restructured after the 3-month period, say in June, July timeframe, we have restructured the contract again to go back to the original pricing. So the squeeze on margins reduced. And obviously in September, again, we relooked at it, 1 or 2 stragglers that were still requesting when it came to the travel industry and the hospitality industry that had still not picked up completely. But at this point, I would like to let everybody know that we have gone back to our original pricing. Things have reverted back to the way they were pre-COVID from a rates perspective. All renegotiations have ended. So any new contracts that are coming up at this point, anything that we are signing up, all of them are at the rate that we expect to sign the contracts. So the squeeze with respect to margins will not be there anymore. Yes, it was there. There was also some instances of accounts receivable which had exceeded some of our expectations and gone to about 60 and closer to 90 and so on. But we had to provide those so that our clients could survive and manage their own cash flows. So even now, now the AR has gone back to original levels. Clients are paying us on time, and we don't expect to see any more squeeze. We should be continuing as we are unless we are making more investments and so on, but not from a customer client perspective or COVID perspective. I think we are clear on that.
Okay. What about the top clients?
Srini, are you asking about revenue growth? How are we looking at revenue growth in the US?
Yes. So obviously we have utilized the current COVID times where we were not, at least in the US, I think India is a lot better. In the US, we have not closed as many new deals as we would have expected. That is because companies are sitting on cash. But our pipeline is amazing at this point. We have utilized our time during the COVID period to do a lot of outreach, reach out to existing clients and new clients. So the pipeline is great. Right now, with the elections being completed, we expect that companies will start executing, especially the enterprise level, the large client, large contracts. We have a very healthy pipeline, and we expect to do at least 1 or 2 big closures this year. And starting January, we expect a lot more closures on our enterprise client projects. So the growth is coming not only from the building of the pipeline, but also on the integration space and the digital transformation space, we have gone into a global partnership with AWS. We expect the cloud platforms to yield a lot more revenue in 2021 as opposed to 2020. That is one of our growth strategies from a revenue perspective. And we have also signed up partnerships with, like Niranjan had mentioned earlier, right? Dell Boomi, Workato, Jitterbit, and so on. So we expect all of these channel partners to step in and help us with our growth curve. So from a projection perspective, Niranjan would probably be a better person to project. But I do expect that the top line and the bottom line both would grow as we keep going.
Okay. Thank you, Srini. Ranjit, can you comment on the Asia Pacific?
Yeah, I mean, pretty much Srini, it is on the same lines as Srini. Nothing much to add. I mean, it's pretty much whatever he said. We had pressures around the initial part for customers, especially who were in the industries that were impacted, and now they've sort of come online, and these were for a quarter or those kind of timelines. So they're coming back slowly to the normal pricing.
Okay. Thank you, Karanjit. So Vikas, any other question, Vikas?
Yeah, one more question.
Sure.
So, as of COVID is still going on, and in Europe, second wave is now on, and lockdown has begun. But in India and US, nothing as such is done. So, are we still planning for future for employees to go for work from home policy only, because other IT companies like Wipro, EY, they have offered till March for a work from home policy?
So to answer your question there, Vikas, I think at least for this calendar year, we have already announced that we will not be doing it. But internally, I think we are deliberating what should be for next quarter. I'm not talking about this quarter, but the next quarter, what it should be. But what we're leaning towards today is that yes, we'll continue on till at least I guess the Q4 of in India numbers to come from employees working from home. US is a different beast because that is something because of the spike, right? And I think we are today still 100% work from home, other than a few skeletal staff going to the office to support the infrastructure. But we are 100% working from home today, and this will continue on for till at least end of December is what we announced to the employees. But like I said, today we're looking at probably at least Q1. I'm talking calendar year Q1 of next year. Also we may be, but I think we are prepared. I guess mentally that it is probably going to be only after April is when we may go to the office. But even that also after that, what should be? Should it be 100% back to office, or it should be somewhere in the middle, 50-50? Those are the discussions that we have started. We have not concluded, but just like everybody else, right? Today we are in the mode of how do we protect our employees, how do we protect our customers from the impact of COVID, and that is going to far outweigh whatever be the issues with people working from home, because our employee health. At the same time, we do have to service our customers. We are mindful of that. So we are working aggressively to support our customers from home. And if we can do that without any productivity loss, we will continue to do that. But if we start seeing any drop in productivity, we may rethink that. I'm talking about at least not for this year, but for next year.
Okay.
Thank you, Vikas.
Thank you. The next question is from the line of Rajesh Joseph, an individual investor. Please go ahead.
Yeah, good afternoon, sir. Can you hear me?
Yes, I can hear you, Rajesh. Go ahead.
Yeah, sir. First of all, thanks for this opportunity. My first question is, though the top line is flat for the past 3-4 years, our receivables are showing an increasing trend. What is your comment on it? And can you please mention whether the entire receivables are from private companies or it is from government or PSU companies also?
Okay. So let me ask the question first to the flat. I don't think it was flat for the last 4 years. What you probably have seen is, flat, it's comparable. We did do some disinvestment of some of the companies. That is why you're thinking that it's flat. We have shown increase in revenue consistently until this year. Because of COVID, there was an impact. Coming to your question on the receivables, yes, the receivables have gone up. That is primarily due to a few customers, both in the US and India, that is causing this. We have these are large customers. We are talking about Fortune 100 companies, and Srini and I always have this discussion where we are saying that okay, we are funding their operations, but unfortunately, these large companies, because we are not of the size, don't have the negotiation power. We have to live with whatever terms of payments that they come up with. These I'm talking about companies like IBM, UPS, Novartis, all those large companies. The payment terms are pretty one-sided, and that is something we have to live with because of the size of our I guess our business, if you want to call it. Now coming to your question on the government, I would say that 90% of our receivables is from private customers, and probably 10% is going to be the government side or public sector side of the revenues.
Okay, sir. My second question is, at present, if my understanding is correct, company is operating through more than 15 subsidiaries. Do you have any plan to streamline the structure by merging few of them?
See, we had issues with, because of immigration-related ones, and we are looking at that. We have hired an external consultant to help with that and see what the impact on the balance sheet is. That's the reason why we were keeping so many subsidiaries. But there is discussion started with the consultant. They have made some recommendations for consolidations, and we are going to be consolidating into our 3 main subsidiaries. Hopefully, some of them we cannot do because of the country origin. We do have to have a company in each of these geographies. I'll talk about a few, like Europe. We have to have a company in UK for doing business. We have to have a company in Poland to do business. We have to have a company in Singapore to do business. We have to have a company in Canada to do business. Those we'll have to have and we'll continue to have. Whereas in the US, we got these subsidiaries because of acquisitions, and we are working on consolidating them into the main parent. That is something that we have begun the exercise, talking to our CPAs, our auditors, to see what the impact is going to be to the balance sheet when we do this. What is the right way to do it? Those discussions have started, and we anticipate that there will be some mergers that is going to happen in the US. But rest of the world, we'll have to live with individual countries requiring that we have to have a company there to do operations. That is something that we don't have a choice. But in the US, absolutely, we do want to consolidate.
Okay, sir. That's all from my side. Wish you all the best.
Okay, thank you.
Thank you. The next question is from the line of Mayank Srivastav, an individual investor. Please go ahead.
Hi, Mayank.
Good evening, gentlemen. So I have a question about the deal flow. So how are you seeing the deal flow and the deal flow's number playing out for us in the second half of the year? Also, in the near term, due to the proximity of the US presidential elections, are we seeing some sort of pushback from clients in terms of postponing their spends or delaying in the terms of decision making? Anything as such is happening?
Sure. I'll let Srini and Karanjit answer this question. Srini, are you back online? You got disconnected. Srini, you back?
Yes, I am back.
Can you speak on that?
Yes. So as I alluded to an earlier question today, the deals with respect to signing of new deals with respect to the elections, yes, there is, as a integral part of any organization, they will consider that, okay, let us see the stability of the country and so on and so forth. But enterprise clients typically are pretty comfortable and confident. We have not seen any pushback on signing of the deals but the start dates have been pushed back, not only because of elections, but because of Thanksgiving break that comes in. People typically tend to take some time off. And then again, Christmas is coming up. So those are some of the reasons that add to it. And we have signed new deals, or we are at the verge of signing new deals, but the start dates on all of these projects are being pushed back a little. That is the only impact that I am seeing at this end in the US. But from a decision-making perspective, there has not been any impact on signing up and having the confidence to sign up on new projects. I hope that answers your question.
Thank you, Srini. Karanjit, can you answer the same one?
Yeah, on the so similar but a little different on the Asia Pacific or India side. Yes, the things went slow when COVID started in the commentary that we made last quarter. But after that, we have actually had a lot of, actually we saw some big deals, like some of the ones that I talked about, which have got accelerated, at least in India and Asia Pacific. So we have signed those deals. And right now the pipeline is actually a pipeline in preparation for next year as well. So yeah, so we are kind of doing good there. On Europe, of course, they historically tend to be very slow, and of course with all the lockdowns, that part is still continuing to be very slow.
Thank you, Gary.
Okay. Thank you.
Mayank.
Thank you.
Margaret?
The next question is from the line of Jagdish Kumar, an individual investor. Please go ahead.
Hi, Jagdish.
Hi.
Jagdish?
Yeah.
Go ahead.
Just one question. So, do we have any client revenue split? What are the current clients having, right? So, the range of.
The voice was a little bit low.
Yeah. Are you able to hear now?
I can hear you. Go ahead.
Yeah. So the client we are having, right? Client revenue mix, right? So what are the top 5 clients was in the range of which million? So those details, if you get in annual report, presentation, right? So that will be good.
Yeah, sure. Okay. I think I understood the question, right? I think top 10% actually went up slightly this quarter. Just a couple of customers that skewed it. We had and top 5 also. One customer really skewed it up. Top 5 customers also went up. So we are top 10. We are around 30%. Now earlier we used to be around 24-25% when it comes to the top 10. Now we are at 30%, which is good in one way. But at the same time, right? We are very diverse when it comes to the customer base. We are not concentrated. Even the top 5, we are looking at probably around little 15% is where we are. It's not like they're significantly high in numbers. So, but one customer has skewed this, and we anticipate to get a lot more from that customer. But the concentration is quite dispersed. We have always been in the low 20s. Now we got into the high 20s, and that is something that is something that we encourage our customers to really work with us. This is something that we've been by design we've been pushing. But primarily, like I said, right, one or two customers have really skewed it up than anything else.
Okay. And just one more thing. So, like,
sure.
We have the clients, right? Client revenue mix, like, let's say, first client is under the 2 million range or 1 million range. So, those segmentation, right, if we get in presentation, that also will help us so that we can just know what are the deal size we are getting in. So.
Sure, we'll do that from going forward next time onwards, Jagdish. Today I don't have it top of my head or readily handy, but we would start putting it into our presentation so that it becomes easy for you to understand how much concentration. Like you probably are looking at how many customers in 1 to 3 million, 3 to 5 million, 5 million above. Yeah, that is something that we typically do, as historically we have not done, but we will do that. We do have that numbers, but not readily handy in this time. Sure.
Nice. Okay, just one more, this Z5, right? So actually, what is that revenue mix you are expecting in that? So if you can provide that, is it?
Are you talking about Z5? Okay, Karanjit, Can you answer that, Karanjit? Z5, what is the expectation?
Yeah, we're talking about 500,000 or so.
Today we have signed up 500,000, to answer your question there, Jagdish, 500,000. We expect that, that should go up, but, currently that is what we have signed up with. And in India, having, $1 million and above customers is not easy, but we do have many of those in India too. ZFi at this time is 500,000, but we expect that to go above, hopefully soon once we do the initial launch. Typically what happens is when we start off with a customer, we start off with a lower number, and that keeps on increasing. And then historically, we have many customers like that in India, all the way from Indigos to Aegon, to Club Mahindras of the world. So we do have long-term customers. The amounts go up.
Yes, sir. Thank you. Thank you. All the best.
Thank you, Jagdish. Margaret?
Thank you. Yes, sir. The next question is from the line of Suresh Peddy, an individual investor. Please go ahead.
Yeah, back again, sir.
No issues, Suresh. Go ahead.
Okay. On the number of shares front, you did mention in the last call that you're working on releasing some pledged shares, and you did do that, I think to the extent of 72 lakh shares. That was a very good and big positive news, I would say. Congratulations for that. And in the same aspect, you have mentioned that you are planning to issue some preferential shares to some of the employees and external stakeholders as well. So is there any progress on that front, sir?
See, unfortunately, it got caught up in some kind of a bureaucratic, if you want to call it. There are some catch-22 requirements. Since one of the investors is a U.S. entity, they have to have PAN cards. They have to have certain other requirements that they did not have. So some logistical delay has happened because of that. The applications have been made to get those PAN cards and related activities in India. Otherwise, we were unable to do it. That's the reason why you see a delay there. But I think that delay should hopefully be taken care of in the next couple of weeks, and we'll get that going, the process rolling rather. And then it's up to SEBI, NSE, BSE to get the approval to get the money in. But we are still proceeding on that. There are certain requirements that we have to follow, the SEBI rules, the RBI rules. So we are getting those squared away, and we'll get this rolling very soon.
Okay, thank you, sir. And
Thank
what would be the extent of that size, sir?
We have published that. Don't know top of my head there, Suresh. But if there are other questions, I'll get our guys to get back to you on the number. But we did publish this in our annual report of what exactly the size is.
Sure, sir. Sure. Thank you.
Thank you. Thank you, Suresh.
Thank you. The next question is from the line of Gopalakrishnan Balraj, an individual investor. Please go ahead.
Yeah, hi.
Hi,
Hi. So I would like to know whether the revenue mostly from development kind of projects or support kind of projects.
See, ours is 95% is development, 5% is support. That mix is probably we do want to increase support-related contracts too, but 95% of revenue is pure development, and 5% is support. With some of the recent signs that that Srini talked about is the AWS global partnership. We earlier had individual country partnerships, so now we went to a global partnership. We are hoping that we will get a little bit more support-related contracts. But today, we are 95% development and 5% support.
Okay, because the big companies having more support projects, so they give the continuous that revenue, right? So that's saying.
You're right on that, but since it's the digital transformation side of it, right? The support contracts are pretty small compared to the traditional way of doing things. Because once the development happens, typically the support is on cloud. What is it that we need to do? Those kinds of stuff is what happens. But it's very small compared to what it used to be. So I don't anticipate that this is going to be a significant jump in top line when it comes to the support contracts, because we are in that different space.
Okay. So what about the banking customers? So any projection on particularly banking customers?
So we do have a good BFSI mix into our I guess numbers. I'm just pulling up what is the revenue by segment. BFSI is close to about 9% of our revenue comes from BFSI today, and we expect that that should go up, especially with COVID times. But it has been steady around 9% for the last few years. But pharma logistics have taken over in the last few quarters. And that is something that we anticipate that is going to continue on for the next few years because of COVID. COVID has changed a lot of perspectives of people. Now, a lot of deliveries happening at home that requires a lot of logistical support. We have UPS as one of our customers, and we have seen significant revenue increase from them. So we do anticipate that that's going to continue on healthcare and life sciences for the next few quarters at least. BFSI has been steady around 9%, and we have, I guess, there are changes happening in even the BFSI space, both in India and US. We have a lot of fintech companies now coming in. How do you, I guess, categorize a fintech company? We do right now today we do it because it's as an IT company. But if you move them to the banking side, and then the revenues would go up. But at the end of the day, the fintech companies are nothing but technology companies or IT companies versus financial companies. So hopefully that answered your question there.
Yeah. So my last question is currently KELTON is having some products like KL Game or something HR related things. So any concentration on product as well other than service?
We don't. Today we don't do too much of product sale other than Envision. This is the oil and gas product that we have. Whereas the KL Game and the HR package are more to do with the helps in closing a sale. The internal the HR tool that we built as a product internally, we have reworked that, and we have used the underlying platform and come up with a new solution for FCI. So we do that kind of stuff where it's not like a product sale. It's still a lot of customization that each individual customer would require. So that is something that we'll continue to do. But what these products does is to accelerate our implementation, I guess, timelines, as well as to get us a foot in the door. So we have done this. This is something that we can do it for you. Yes, there will be customization. Typically, it is we have seen 80-20 is what our goal is to get to, where the product the solutioning happens with already ready-made 80%. But what we have seen with FCI, we've seen probably is closer to 50-50, and that is something that probably might continue on because the requirements for these large enterprises is very custom. But underlying platform did help in the sale as well as accelerate our delivery timelines. So to answer your question, except for Envision, we don't have a product that we sell as a product, but we do use these products that we have built in-house to speed up the delivery.
Yeah. Thank you. Yeah.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Anyone who would like to ask a question, you may press star and 1 at this time. As there are no further questions from the participants, I now hand the conference over to Mr. Niranjan Chintam for closing comments.
Thank you, Margaret. Thank you, everyone, for joining our earnings call. Hope you have a good Diwali. Looking forward to having you on the next quarter, sometime in January, February timeframe. And, hopefully, we'll have better numbers than what we have for this quarter. But with the COVID raging still, we'll be happy to get the same numbers as last time. But this is something that's unfortunate that we are in this pandemic times. But today we are trying to keep our customers happy, our employees safe, and that is the goal for this next quarter too. But hopefully I will come out of all of this with a better new year, and then we'll hopefully see how it goes from there. Thank you again for getting on the thing on our quarterly call. So looking forward to seeing you the next time.
Thank you. On behalf of KELTONTEC Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.